seeing the Hang Seng is holding on to some bit of a gain. Taiwan index is holding on to gains right now.
The bigger resistance comes in at about 24,993.
I would think my vote also would be a CRR cut.
Through 24,699, 24,700. Remember, there's been a sharp run-up yesterday.
In India, we are overweight. We believe we're in a secular bull market.
With the first half growth that you've got, RBI could come down to 6.7, 6.8.
The policy reported unchanged at 6.5%.
And we are calling for 25 basis points rate cut in Feb and April.
Markets high for the 6th day in a row.
Be it rate cut, be it liquidity action, be it whatever is the action, they have to be well timed.
It's a day of a lot of updates. The mid-cap index, though, is doing really well.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that is the day so far. Markets, of course, taking it a bit easy in this last hour of trading, which is coming up in front of us. I mean, it's absolutely flat. Nothing to show for it. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi, Rima, Nigel, of course, is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, good afternoon. You know, I would say maybe nothing to show for the day, but plenty to show for the week, guys. It's been a great week for the market, right? I mean, the Nifty is chugged along about 2.5% higher. The bank Nifty is 1.5% away from the all-time highs. Mid-caps have done well. So maybe easy Friday because the hard work has been done through the week.
And I was looking, where is Nigel? And suddenly I find
there
him
he is,
in the box
on the big screen.
On the side, on the big one.
Party time, guys. It's our birthday. Party time.
Well, yeah, absolutely. You know, so just a couple of points before we go any further. A bit of a break, right? I mean, on the Nifty and the Bank Nifty, the markets generally just treading water, not really doing very much. It's very difficult to distinguish whether this is policy related because the policy did not throw up any surprises. So there shouldn't be any worry on that front, and broader market is doing well. So those are two factors which maybe just are telling you that it's just the run-up. I mean, and the backdrop, which has been very, very strong, that we are just kind of sort of not doing very much right now once again. So RBI CRR cut was in line. So no repo was in line. CRR cut was in line. At the margin, right? I mean, was the commentary a little hawkish? It's a question mark. I don't know. I mean, and we'll have Lata join us a little later and we'll get you more commentary. And the reason I'm saying that is because in the context of what it was, I mean, the governor essentially repeated a couple of times that we'll have to balance growth and inflation and we'll have to be very careful, etc. So not from a bond market perspective because the interpretation will be very different, but from a stock market point of view, maybe at the margin, was this a little hawkish? Yields are higher, by the way. Yields are higher on the day. They're not up after the policy decision. So that's another thing. And of course, I mean, the run-up has been good, right? The mid-cap, the Nifty is up 2.3% this week. Bank Nifty is up 3% this week. And broader markets are doing well. Mid-cap index on track to gain 4% Friday to Friday. Small cap index is up 4.5%. And small cap index went up 5% last week. So that's basically almost 10% in this fortnight, in the last 2 weeks. So very heady, strong gains, especially coming through in the broader space. You know,
Prashant, I just want to say, like, on the point of the disappointment, whether this commentary was not as dovish as one would have thought and all. But if you remember, we spoke to so many commentators through the week, right? And the poll, the CNBC-TV18 poll was saying that, you know, maybe 25 to 50 basis points of a CRR cut, and the governor delivered that. And a lot of commentators were saying that, look, don't expect the RBI to look at only one data point and jump the gun and do, you know, massive rate cuts and all. That's not the kind of central bank that we have. And I guess that's one of the reasons why it's so widely, you know, respected as well, that it's incremental, it's sort of very thought through. And I guess the inflation focus was very, very evident in this policy as well. Rima.
Well, that is the reason I'm saying. I mean, you know, it's also what they say and what they don't say, right?
Yeah.
So, I mean, if they had not said some of this, and then, I mean, you know, markets would have interpreted that maybe they're you know, it's our central bank speakers, and Greenspan was famous for this. And of course, I mean, you know, that was a different era. But the point is, it's what they say and also what they don't say. And I think from what they said, especially given the context of the slowdown, the 5% GDP handle, maybe, I think that's the reason why I'm saying maybe at the margin, from a stock market point of view, maybe a little hawkish is the way I would read things.
No, absolutely, because I mean, he did go on to say on record that the MPC feels that growth has bottomed in Q2, and maybe it won't be that bad. So let's see. Rima.
Well, let's just quick run through of the big movers of the day then. On the way up, it's autos. Autos are the leading sector. Bajaj Auto has rebounded after cuts in the earlier part of the week. Bajaj Auto 2.5% higher. Tata Motors, Maruti Suzuki are up 1 to 2%. Other than that, you've got an Axis Bank higher in trade. L&T, ITC, Titan, some of the noteworthy winners. On the way down, Cipla is losing ground. Cipla's lost 3.5% this week. Bharti Airtel, it's flipped and flopped both ways. Some days up, today it's down more than 1%. In the financial space, you've got HDFC Bank, IndusInd Bank under pressure. Some large cap IT names like Infi are down 1%, while Reliance Industries, that heavyweight too, is weak.
Absolutely. Just few mid caps to add. It's such a great day for mid caps as well. Flourish is for all to see. Look at HBL Power Systems 9%, Tilaknagar Industries 9%. Borosil Renewables, you remember this company was on the channel, just a couple of days back saying they really need more protection. They need anti-dumping duties, and that's come through. So that stock's also up and about. So mid-caps definitely partying this Friday. Nigel?
Yeah, Tilaknagar was the one that stood out from the list that you put out there. A little bit of gin and the
Friday
new rum.
factor.
Yeah, gin and samsara, and I think the other one is sitara, rum. So both those two coming in from that stable. So maybe perfect Friday factor, and in December as well, so the rum blends well. But let's talk about markets. Let's have Mitesh back with us on the show. Hi Mitesh, good afternoon. Good to see you win. What about individual stocks? What are you looking at? And if you could tell us your view on the Nifty. Today it appears that sort of a day that maybe a lot of the good news for the week at least was factored in with the run that we saw yesterday.
Oh, that's right, Nigel. I think a couple of points here. One, I'm still not sure whether we've started a new rally. So it looks like, the Nifty particularly is going through what I would call as a shift of the range on the upside. And now I need a 24,800, 820 zone to be cleared on an hourly closing basis. Till then, it could be a range between 24,500 to about 24,800, and we'll play it that way. So try to buy near the lower end of the range, try to book profits around the upper end of the range. And that's the way you take it forward. On the stock side, I have a buy on Lal Path Labs. That's a stock which is bounced back nicely today. So keep a stop below levels of 30.25. Look for a first target of around 31.20. And if it crosses 31.20-30 zone, then we'll look at eventually much higher levels being tested over here. And the other stock which I have on my radar, that's a buy on Tata Motors. Disclaimer, we have some positive or bullish bias call spreads over here, so there's vested interest. But what I want to see again here is a breakout about 810, 811. Now, once that happens, buy the stop at about 795 and look for a first target of 840, 845.
Okay. Thank you very much for that, Mitesh. We'll come back to you. We've got Prakash Diwan in the house, fresh from Goa, Paris.
Which destination?
It's just Goa.
Okay.
Don't remind me of where next I need to go.
Where are you going?
How's the weather? Is it hot in Goa? Or is it like Bombay-like weather? Or
It's much more cleaner though.
but is it hot or?
Goa is expected to be warm.
Yeah.
I know last time I was there, you were talking about Goa being equally hot as compared to Bombay, but no, it's far better.
We keep talking about all this urban consumption slowdown, and I'm sure you've seen none of that in Goa. I'm sure every place is packed, right? And on a more serious note, tell us from a stock perspective as well.
There was this recent survey which said it's dropped on the on the list of popular destinations thanks to a little bit of a weak infrastructure, poor transportation, which is a fact.
Yeah.
But then, at times you don't really have much of an option but to fly into Goa if you have a short weekend to celebrate and enjoy. But yeah, I mean, they could do with much more improvement.
So what are the fresh ideas?
Goa ideas or no? So Nigel's
on the restaurant. I thought restaurant ideas.
I know, that's what I'm saying. Which new eateries? But
travel, tourism. Tilaknagar we were discussing.
Yeah, exactly. So I just wanted to point out that Tilaknagar is actually very popular for the brandy portfolio, and then we can talk about that at length. But consumption as a theme. Probably this segment of consumption remains the most insulated. So we've always liked it. And I remember some days back you had Madhu Kela coming on your program and talking about this. So actually, that's something which has been so resilient that you'll probably see people allocating more money to it. And the safest to go with is United Spirits.
I think Nigel's coming in. Yeah.
Prakash, what is the average
Nigel.
consumption of an Indian with regard to beer that compares with the global average? What is it?
Oh, it's way, way too low. So there's lots of room.
Fathom a guess?
No, I think compared to China, we are 1/12 or something.
I think it's 2 liters versus 30 liters on an average. So Prakash,
so that's
better do your part.
But probably, that 2 liters is also because of all the hard work that we put in. But no, I know, I do take your point because there's a lot of rationalization that's happened on the bottling side. And on a more serious note, a couple of companies, that we've tracked in the past, their Bangalore unit, the Hassan unit, is kind of, used efficiencies and AI also at times, by the way, especially in rejection rates having come down. They've used a lot of optical QC and all of that. So I'm sure there's much more happening in the industry in terms of labeling, bottling, transportation. Whereas beer making, you probably have already mastered it. You can't do much about that change. Consumption, of course, is a bit slow on other things, but not this segment.
You're talking about some of the problems in Goa. I think they should fix transportation. And I think
public transportation,
the taxis,
and I think it's probably still deep rooted in terms of that north-south divide, and you don't have the guys from the north wanting to go to the south and things like that. So it's still a bit of that.
It's the infamous Goa taxi mafia. Let's call it for what it's popularly called.
I think over the last 13, 14 years, I think I've spent maybe 10 Decembers in Goa, 10, 11. So,
this year too?
Maybe for a short bit. Let's see. I don't know. But Nigel, you want to say something, Nigel?
No, my first December in Goa for Christmas. I'm in Goa, Prakash. I hope to hit you up. 25th to 30th, I'm in Goa. My first time I'm going to be in Goa for Christmas. So it's going to be a special one. Prakash, look forward to catching up with you.
So absolutely, and I'm sure Goa will get more crowded given your popularity. So we'll brace up for that.
I'm getting my two little kids, so so I'm going to be pretty good. But I hope to catch up with you. And just one more point, Prakash. Since you're in Bombay, don't miss the People's Beer. It's available in Bandra now. So that's a quick one. Let me know if you don't get it.
Is this too much alcohol?
I think so, guys. I'm going to navigate back to the market. Guys, we still have a trading market to look at for the next couple of hours. So in terms of big stories, big themes and ideas for the week, banking, now we've heard what we had to hear. The MFI bit is also very well known. In terms of stocks, anything fresh? Any new ideas? NBFCs, banks, gold financiers, anything fresh?
No, so to be honest, we are very clearly waiting for some of the, and the RBI policy is probably one of the milestones that was being awaited to figure out in terms of how soon the government spending starts. And that will start impacting a lot of the infrastructure names, a lot of the capital good names, which have been sideways for a while. So you would probably start cherry picking out of that. Look at how the railways have kind of gone into this Kavach order. It's like Kavach 2.0 or whatever you want to call it, but it's significantly larger in terms of coverage and depth as compared to what it used to be. So that is a very good indication that all these projects that have been talked about and have been awaited will see that. So stock specific, it's still going to be playing safe with the bigger ones. I think the way L&T and all are also consolidated so well, I would still stick to the large caps at this point in time. There's nothing very spectacular on the small cap, mid cap yet.
Okay, in fact, talking about railways and the Kavach orders, it's Kernex Micro, which has won a large 2,000 crore order win. And that's more than the market cap of the company. Vinny joins in with the details. Vinny.
Absolutely. Good afternoon. So this order that they've gotten from Chittaranjan Locomotive Works, 2,000 crores is the order size. And like you were mentioning, 1,900 crores is the market cap for the company. So when you look at it, yes, surely a big order. They're supposed to deliver 2,500 sets on board coverage equipment. And this is going to be delivered by 5th of December 2025. So within the next year, they are supposed to be doing this delivery. Let's take a step forward and just look at the revenues of the company. When you look at it in the first half of the year, that is right now in Q1 and Q2, itself, they managed to just see 70 crores in terms of order revenue. Before that, in FY24, it was just a 20 crore revenue that they managed to see in terms of top line. So that is something that we have to watch out for, because when you look at it, currently in terms of net worth, also 116 crores that you would look at it. Order size is around 17 times the net worth, while in terms of the order size on an annualized basis for the first half of the year, FY25, when you look at it in terms of revenue, that would be around 14 times. So execution is going to be the key. The timeline is going to be the key, because that is going to be the main focus area, because this is a very big order win that the company has received, and how are they going to be executing it is something that we should watch out for, though a big order win, and that's why the stock is rising.
Okay, all right, got that. Thanks very much, Vinny. Since we were discussing the stocks specifically on these railway names, whether it's Kernex or even in HBL Power, I mean, part of their business is, I think, signaling systems, right? So that stock got very excited as well, as up 8-9% higher. Anything specifically that you would buy in railways now?
So, just as a matter of disclosure, I have a position in Kernex personally. And I'm quite familiar with the way the business has evolved over the last many years. So what Vinny said, you know, it's something where it's taken them a long time. The company's been around for more than 20 years. It's not done anything very significant till late last year, where the first round of Kavach implementation happened. And originally, it was just 3 players, HBL, Kernex, and the unlisted play called Medha. Okay. So, you know, so they own that patent for Kavach along with the RDSO. But now this, you know, ordering which has started, so with this, why it's interesting is because this is, Kavach has 3 parts. One is just the locos, the locomotives. The second is the railway station, and third is the track. You need to connect all these 3 and integrate the system. Okay. This is just one part which we are talking about. The Chittaranjan Loco Works has assigned. So you'll have much more flowing down into this pipeline. So it's a very promising space. And apart from these 3 players, the OEMs, you have a lot of vendors on the EPC side who will benefit. So depending on whom they choose to go with.
Any listed? Any listed names?
Yeah, they've gone with KEC in the past.
Oh, like that. Okay.
They could go with some other listed names also. They've already, I think, indicated that they would have. But that will flow out. So as I said, you know, this is probably one of the many things that the government could start. Look at how IRFC has behaved today. You know, certainly there's a lot of order book growth that is visible. I'm not recommending that to, you know, because it's already from a price to book, it's been fairly expensive. But you could expect something coming on the rooftop solar plan, that project that the government had initiated but hasn't taken off. It's just 6% as yet. You know, out of that 1 crore, it's just about 6% that's been done. So there's lots which could happen in these areas. So we'll continue to revisit these companies as the orders come through.
Okay, let's get to the other big story, and that's PVR Inox, which is in focus after Pushpa 2. The Allu Arjun starrer has seen a whopping 165 crore collection on day 1. The sequel has now dethroned the Shah Rukh Khan's Jawan to become the biggest opener of all time in Hindi. Shilpa is here with the details. Shilpa.
Well, you're absolutely right. You know, Pushpa 2, which released yesterday, has been seeing some, record-breaking collections. It has become the biggest opener for not just for the Hindi film industry, but for the Indian film industry in total. 165 crores is the net box office collections that it saw yesterday. And in addition to that, it also clocked 10 crores on the special premieres a day ahead, which was held in Andhra Pradesh, Telangana and Bangalore. Now, from the 165 crores, you know, most of it obviously came in from the Telugu version, which was about 85 crores, and the Hindi version raked in about 65 crore rupees. And this is the data that we've got, you know, from the industry. And like you said, it has become the biggest opener, and it has also broken the records of RRR, which was earlier the biggest opener, and that had clocked at somewhere at about 156 crore rupees, and then Jawan, which had clocked at somewhere around 65 to 70 crore rupees on their opening day. Now, I spoke to some of the movie exhibitors, and they're telling us that yesterday the occupancy levels, firstly in the 5 southern states, were about 95 to 100%, and the rest of the India, excluding the south states, was about upwards of about 75%. And the reviews of the movie have been really good from yesterday, and so they're expecting the overall occupancy over the weekend also to be similar levels of 75 to about 100%. And you know, these exhibitors are also expecting that Pushpa 2 will go on to break records, not just in terms of the opening day, but in terms of gross box office collections, and could be the biggest Indian movie that we have seen so far. So, you know, Pushpa 2 is really staying true to its tagline, whether you call it Pushpa 2, the rule, or, spreading like wildfire. Record-breaking box office collections there.
Just a quick, Shilpa, thank you very much for that. Look at HBL Power. I'm not sure what has happened, but there's a sharp sell-off. I just saw the stock up 10%, 11%, actually maybe more. It's about 6% higher now. So there's about a 5-odd% drop-off which has happened from the sort of day's high. HBL, of course, has been a multi-bagger over the last 4 years or so. I think it's up some 7-8 times at least. Connex is still limit up about 5%. We just spoke about that a while back. I think what we'll do is we'll take a quick commercial break here. Prakash, thank you very much for joining us. Appreciate your time. Have a good trip, and
see you soon.
Nigel will hit you up.
Yeah,
go up,
look forward to that. Thank you.
Well, we'll take a quick break here. We're going to come back, and there's more conversation on markets on the other side. Stay tuned.
Years ago, CNBC-TV18 set out to be a part of India's story, your story. For a quarter of a century, we've stood together by your side. Through every peak and every fall.
We see CNBC, the TV, and there's great content in it and great viewership.
Navigating the tides with you and becoming your trusted partner and investment ally.
I must say I don't watch business channels. But if I do watch, I watch CNBC.
Turning your dreams into legacies.
And my memories go back to you being a single room studio, to being such a huge facility. And I think from having a few thousand viewers to maybe having millions of viewers.
As we celebrate 25 years of shaping India's economic story, we reimagine the future of India's economy. A future we will continue to build together. 25 years of CNBC TV18. Let's begin the next chapter together.
Okay, welcome back. I think we've got the market, which is sort of doing nothing, 20 points lower, and we're at about 24,690. So just trending slightly sideways without too much action. Broader market is doing much better. 1,600, almost 1,700 stocks are higher, and about 1,000 stocks are down at this stage. Harsha Upadhyay is with us from Kotak Mutual Fund. Harsha, good to have you with us here on the program. As a stock market person, Harsha, how did you read the policy and the RBI policy, that is? And I was wondering aloud, only wondering that maybe again from stocks was it a little, was the market left waiting for a little bit more? How did you feel?
Prashant, I think it was more or less expected given the tight liquidity situation that we are in. It was expected that there would be some measures around liquidity easing. And that's what we have seen. There is going to be additional 1.2 trillion liquidity that will be infused over the next few weeks. And that's definitely going to help our economy and also the banking sector, because the CRR cut will help them see slightly better net interest margins going forward in the next quarter. So overall, I think it's been more or less in line with the broad expectations that the market had. And that's why you have not seen any exaggerated market movements.
Harsha, and so you mentioned market. Just a quick word. Broader market is doing very well. I mean, it's really back in form. The small cap index that we were just sort of mentioning when we started, the small cap index is up 10% in the last fortnight. So things are in that sense back on track, or should we kind of read this in conjunction with maybe end of the year slightly, and we'll get the real show in the new year? Or do you think we're really back in that sense?
Prashant, at least I feel that it's too early to say that because the earnings numbers have not been so great in the previous quarter. And as we get into the result season in the beginning of the next calendar year, we'll have to keep a close eye on mid and small cap bucket, because that's where earnings have really seen a serious negative turn. And if that continues, probably we are in for higher volatility. But if that was just an aberration, then probably markets would consolidate and probably look at higher levels.
Harsha, any changes to your portfolio in the last 2 months post the Q2 earnings? I remember our last conversation, you said you brought down your weightage in autos because you were quite disappointed and valuations were high. What other changes have you made?
Not many changes, I would say, but clearly our portfolios have taken a little bit of a defensive tilt. We have increased a little bit of banking exposure in some of our funds. We have increased IT services exposure as well. So generally, I think the portfolio beta has gone down across most of our portfolios. And we have also been looking at most of these sectors from bottom-up perspective and seeing where there are likely disappointments, and we are kind of trying to trim those positions, or wherever the valuations are expensive, we are trying to trim those positions. But broadly, I would say we have turned a little cautious in the last couple of months.
And where have you trimmed your holdings?
Rima, I couldn't hear you.
You said you've also turned cautious and you've trimmed your holdings in certain sectors where the growth outlook is patchy or valuations are high. Do you want to tell us where you've brought down your holding?
Nothing much in terms of sectoral trends. One which you also mentioned earlier in the show, that's about cutting some exposure in auto and auto components, more because of the huge performance that we have seen over the last few quarters, and the fact that probably next 1 or 2 quarters may not be all that great for all the subsegments of auto. There are still some pockets which are continuing to do well. From that perspective, we have taken some money out of this basket. However, now, after the correction that we have seen over the last 2 months or so, the valuations have come off quite a bit. So I don't think there is further action required on this front. As far as industrials are concerned, that's another segment where we have booked some profits over the last couple of months. More because of the valuation richness rather than any earnings slowdown that we are witnessing in any of those pockets. However, we'll keep an eye on the January result season and then probably take further calls on our portfolio. that's what we'll probably do.
Harsha, what about the beaten down, bombed out names within financials, the private banks, etc.? I mean, that of course is our consensus kind of overweights and there's valuation comfort, etc. I'm talking about the lesser talked about names in the NBFC, even MFI spaces. I mean, if these spaces do go through, they're more cyclical as compared to banks, which are steadier in that sense. Do you think it's time to start looking at some of them? Have you done so?
No, Prashant. At this point of time, we are sticking to large private sector banks and large public sector banks. MFI is something that we don't hold in most of our portfolios. We turned negative on that segment quite early, and thankfully, we didn't have any exposure in recent times when the sector has witnessed a lot of downturn. Similarly, the other pockets where there are certain regulatory concerns at this point of time, for example, life insurance is also something where we do not have a very large exposure. So clearly within banking and financials, most of the weight is coming in banks, especially large banks.
The entire financial space. What about exchanges? Actually, MCX is the big mover. We talk about BSE, but MCX is up 7%. And maybe a little cleaner, sort of more dominant position there. Any thoughts here?
Prashant, we clearly see that the penetration levels that we are seeing in the capital markets is likely to increase, which is going to be good for all the entities which have incomes coming from capital market related operations. So stock exchanges, wealth management firms, asset management firms. These are all part of our various portfolios at this point of time. On that entire basket, we continue to remain quite constructive.
So Harsha, on platform companies, the likes of Zomato, Swiggy, etc., we always knew the opportunity was there, growth is there. And now over the last few months or quarters, we've seen that they're ticking the box or improving the profitability. So that may not be a big concern going forward. But now the problem is valuations. Valuations are very high. So what is your call on these platform companies, new age tech companies?
We have been positive on quick commerce as a segment within the new age businesses. And clearly, we were one of the early ones in terms of picking this particular space. And we continue to hold on to them. Yes, the valuations have moved up, but as have been the kind of delivery that we have seen in terms of the earnings trajectory. So we continue to remain very, very positive on this space and continue to hold the positions.
To buy even at these levels, quick commerce companies?
Quick commerce is something that we have been positive on, as I said.
Okay, all right, Harsha, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC-TV18 this afternoon. Appreciate it. Well, I think 28 or 30 points lower on the Nifty, 24,681. Let's get to another story. The Department of Consumer Affairs has reached out to all our customers to verify the company's claims of resolving 99% of grievances. The response from the customers was disappointing. Abhimanyu is here with some of these details. Abhimanyu, good afternoon.
Well, good afternoon. Ola Electric had earlier made a claim that over 99% of customer grievances had been resolved, following which the Department of Consumer Affairs had reached out to several of these customers. Now, the 250-odd customers they reached out to had revealed dissatisfaction so far, which clearly is indicative of a reply which is quite contrary to what Ola Electric had earlier filed as part of a response. Now, last month, the CCPA had also directed an investigation to be carried out into this by the Director General of the Bureau of Indian Standards, and the reply was to be submitted in 15 days. But what we have learned so far from government sources is that it's taking time, and it may take till the end of this month till the BIS is going to finish its inquiry. It remains to be seen what will emerge from the inquiry, even as government sources have indicated that they are going to reach out to several more customers, in which the total number of customers is over 10,500. So, of course, that is something something which is taking time, in which the government is going to corroborate the responses which were earlier submitted by Ola Electric with the real response of the consumers who had been mentioned, and it was claimed by the company that the responses had been resolved. So based on that itself, any future course of action would be undertaken. Earlier, we had also reported from government sources that the government is also considering to expand the ambit of this probe and may send notices to another EV OEM, but it remains to be seen whether there is going to be any further development on that count.
Okay, all right. Thanks a lot for that, Abhimanyu. Well, as we went through that data point, we had the Nifty that almost went into the green, the sensex moved into the green, and the mid-cap index continues its party. So it's not such a bad trading session, though the headline index is more or less flattish. Take a look at the number of stocks that are advancing. But it's that time of the day where we get Nimesh to tell us what's going on. Nimesh, it's been a very, very good week. The bulls were partying. It seems they've taken a bit of a pause for today. Maybe they resume next week.
A Friday factor, so to speak, Nigel. But again, no complaints because the broader markets have done well. And again, there are a lot of individual names, especially the new F&O entrants. I've been saying for a while now that's where the whole action seems to be. Every day you're seeing newer names in the F&Os, the new entrants, so to speak, buzzing into it. Classic example is delivery today. That's up 6%, no news, but that's rallying. So there is a bit of interest back in the newer F&O entrants from the retail and HNI category. From a flow perspective, today is a bit of a mixed day. There is a bit of selling in the large cap names, a bit of profit breaking, so to speak. But I understand there's going to be a small MOC basket buying in the mid cap names. So last 30 minutes, you might see further action in the mid cap names. So again, that's the space which is relatively outperforming in the last couple of days. So again, another big macro event seems to be out of the way. The RBI policy is out. We don't have much cues to watch for the next half of the December series. So you might see some fun and games and some action in the broader market stocks. So that's the overall feedback. But today's outperformance in broader markets is backed by FI buying as well.
All right, Nimesh, what about individual stocks? What are you picking up?
Well, so in terms of individual names, the first stock is Bajaj Auto. We saw a big cut in the last couple of days, but it's bounced back smartly in today's market, largely because one, a domestic mutual fund is an aggressive buyer, and the sense is that the selling from a large global fund is largely over in Bajaj Auto. The second is a couple of stocks where there is delivery-based buying, Indus Towers and as well as Tata Power. Both are buzzing in trade, up to 1% on both the names. But again, the delivery volumes are on the higher side, and I understand the FI buying is resumed in both those names. The third is Jio Financials. Well, the stock has been consolidating. For today, I understand there is an aggressive selling at a leading FI desk, so that's something to track as far as delivery-based selling in Jio Financials. And the last is Vedanta. A big move in the last 40-45 minutes of trade. I guess above 480 there is a bit of breakout as well. Some HNI seems to have bought as well. And for Vedanta, the next big trigger is as and when the record date comes for the demerger. It's still some time away, but that's something which is keeping the stock excited. That is Vedanta Industries.
Okay, all right, got that. Thank you very much, Nimesh, for all the chatter and all the stock buzz. We do have to take a very quick break on that note. Come back on the other side and some final calls coming up with our technical experts.
Five years ago, I think I was a kid. I had no idea what CNBC-TV18, not even the stock markets were at that time, right? The only CN in my life was Cartoon Network. But having said that, post you studied, you did your marketing, you did your media, you did your finance and all that, clubbed all of that together, and the most perfect place would then be CNBC-TV18. The goal for me was to be rejected by the highest person ever. And that time, it was Shireen Khan. How do you reach out to her? Come Twitter, which is now X. I used to tweet incessantly to a lot of people, and Shireen Khan actually, replied to that tweet saying, why don't you send across your resume? And that's how things happened, and 10 years later, I'm here. I found my voice here at CNBC-TV18, so I have a lot to thank CNBC-TV18 for, I guess.
Celebrating 25 years of CNBC-TV18
Welcome back. So last hour action visible in some of these steel names. So Tata Steel has moved up. JSW Steel too has a bit of a gain going for itself. RVNL is higher by close to about 5%. But Mitesh is now back with us for a few BTST calls for the weekend. Mitesh.
So I would recommend BTST on REC with a stop at 554. Target of, on the upside. 570 can be looked at. And Pidilite is the BTST with a stop at 3140 for targets of 3200.
Get that. Just a couple of more names. Policy Bazaar, Mitesh, any thoughts here? I mean, it's past 2100, yeah.
Yeah, actually, so, one, it's bet the targets. Two, I think, it's too overbought too, right? Again, the risk-reward equation will not favor a trade. So if somebody's holding, just trail your stop to about 22,000 and hold the stop. But for me, I think the bigger worry is that fresh entry, I don't think can be advised at these levels.
What about a cash stock like Goldium, the artificial diamond company?
So Goldium, I think, has had a fresh breakout. Last time the stock had peaked around these levels of 388, 395 zones, the multiple closings over there. So today's a fresh breakout. You can slowly accumulate, add a bit over here on a pullback to about 410, 45, buy more. I think the stock is heading towards 500 plus levels.
Okay, all right. Thank you very much, Mitesh, for that. So those are individual sort of trading ideas and view on a few stocks as well. Now, back to the big story of the day, which is the RBI. So the CRR cut came 50 basis points, which means more liquidity in the system. As expected, it did not cut the repo rate. The RBI lowered its growth forecast and upped its inflation forecast as well, in line with what the market expected. Lata is here to put all of this in context and, more importantly, kind of sort of tell us, are there any clues in what the governor said, the questions he took and the answers he gave about what policy in the future holds? Lata, over to you.
Well, first up, I think one of the most practical policies to be able to exactly train its eyes on the problem of liquidity not yet ready for a rate cut. So on liquidity itself, there is a little bit of surplus liquidity in the system, but it's whittled down from about, over 4 lakh crore end of September. It's come down all the way to barely 40,000 crore. On some days, it goes on into a deficit and banks are borrowing from the Reserve Bank. And that's very obvious because cash withdrawal is more during Diwali and the normal Q3 period. It's more during elections. As well, the Reserve Bank has been selling a lot of dollars, 60 billion or thereabouts. And that also has pulled out a lot of cash. At least 4 lakh crore has been pulled out. About 4.2 lakh crore was the surplus as of end September. It had come down to 40,000 crores end November. Of that, the CRR cut replenishes 1.16 lakh crore. There is a money multiplier, and in course of time, it will become 4 lakh crore over 6-7 months. But the governor, we asked him, and the governor agreed that there will be a liquidity deficit continuing. The cash outflow, the tax outflows are temporary because the government spends it and it comes back. But cash withdrawal by you and me, as well as when the Reserve Bank may continue to sell dollars, given that the Trump presidency is yet to begin, we could well see, attacks on the currency or withdrawal of foreign exchange by FPIs. There will be a deficit. Will he do more? Over there, he did not give away the big weapon that the market was looking for, which is open market sales of open market purchases of bonds. People were expecting that if he did that, then he could put more money. But he did not say that all those are on the table. That would have been his usual statement. He just did not allow himself to be drawn in. So I think OMO purchases at the moment is not on the table. When it comes to the repo cut, obviously the question now is, we didn't expect this time. Will it happen next time? I just want to point out to a couple of statements of his. He said, prudence, practicality and timing of decisions become critical. RBI endeavors, again, quoting him, to implement timely and carefully calibrated measures to derive maximum impact. I mean, the way in which it was contextualized, he very nicely defended why you can't do a cut now, because it is a bit timely and practical. If you do it now, there is no liquidity in the system. It won't get passed on because everybody is dying for deposits. How will they pass on a lending cut? So I think it was very beautifully timed, phrased and explained. And then he went on to another statement. It is necessary, given the flexibility of the neutral stance, to wait for and monitor the incoming data for confirmation of the decline in inflation. Now, everybody's guess is when you meet in February, you will see a fall in inflation. So again, there seems to me at least a hint there that when there is a confirmation of the decline in inflation, they can move. They will not wait for actual 4%. That's my guess. And to be fair, let me come to the forecast itself. In the first place, all the 4 forecasts of inflation, that is for Q3, Q4, Q1 and Q2 as well next year, has for growth has been lowered and for inflation has been upped. But the Q2 FY26 next year, that is almost a year from now, the forecast is 4%. So if I put both those together, the governor saying that, we will look at the incoming data for confirmation of fall in inflation and their forecast of 4% inflation in Q2 FY26, it very much looks like a repo cut is possible in the February policy. Once again, I would think that the Reserve Bank had lost a bit of its credibility by completely being out of line in its Q2 forecast. It's restored practically all of it by boldly bringing down the growth forecast by between 40 and 60 basis points for the various quarters.
Okay, all right, Lata, thank you for explaining that to us. And by the way, before we take our next break, I just want to point out one trend that's very prominent now in the market. A big surge in auto stocks all of a sudden, and some consumer stocks. So I don't know, is this predicated on what Lata was saying, that maybe eventually you move towards the rate card and with the CRR card, there's greater liquidity? Remember, the governor said that it is up to banks to do whatever they want with the additional money that's at their disposal. But the auto index has surged to the high point of the day. Look at Tata Motors, Bajaj Auto, look at Maruti, look at Eicher Motors, look at stocks like Tata Consumer, ITC, Titan, Trent. A bit of a consumer flair in the market. It's not, you can't ignore it and you have to take note of it for sure. Okay, on that note, let's take that break, come back on the other side with some more market talk.
It's funny, but I was in the second standard 25 years back, so it's long ago. I always wanted to be a journalist, but by the time you come to that 10th standard, 12th standard mode, your idea about life changes. So I come from a family of chartered accountants. Despite wanting to be a journalist, I went for being a chartered accountant. But that thing of being a journalist was always there. I was working as a tax consultant, nothing to do with stock markets. But then I thought, okay, this is the time to make that switch, do something to be with CNBC-TV18. And in one of the conferences CNBC-TV18 was covering, I was there and Mr. Anuj Singhal, who was the stocks editor at CNBC-TV18, I met him and he was like, would you like to join us? I was like, Neki or Pooch Pooch? Of course, I would like to, I would love to. It's been 8 years since then. I track stock markets, I track mutual fund, personal finance, I track sustainability, which is my passion project. So this is a place where if you want to do more, they'll never stop you. Ideating something is never a problem as long as you are creating the best for your viewer. And what is a better place to do that than CNBC-TV18?
Celebrating 25 years of CNBC-TV18.
Okay, welcome back. We've got, 7 minutes to go for the market closing. We had a big conversation earlier in the morning. Jonathan Garner, Chief Asia and Emerging Markets Equity Strategist at Morgan Stanley, was with us. We spoke with him about India in the global context, Trump, whether China +1, that trend will only get better in India's favor as we head into 2025 and much more. Listen in to some of those excerpts.
Rates, but these growth numbers that India is still producing are still just about the best in the world of any major economies. If you look at the US, growth is slowing. If you look at some of the markets that we're negative on, for example, Korea, that's in the news right now, we're predicting like a 1 handle on GDP growth in Korea next year. And the markets that are more exposed to sectors like autos and semiconductors globally, where there's a cyclical slowdown underway, they are likely more pressured, and in many cases actually are starting to underperform. So I really wouldn't be too alarmed on the situation in India. So India sits there as one of our top 3 preferred markets globally. And we are optimistic that in the first half of the calendar year next year, so that is the second half of the financial year, as it were, in India, as we go through to the end of March and then the end of June, we will see a pickup. And so we are above consensus on earnings growth. Those earnings estimates have come down, but we think earnings growth moves back up again. And we have a 93,000 target for sensex for December of 2025, which means it's got more upside than pretty well anywhere else other than Japan.
Okay, that's the view coming in from Jonathan Garner. Hemang Jani is now with us for the last 5 minutes of trade. Hemang, your impression about the day this week? In fact, the last 2 weeks, we've seen small caps raise. What have you been advising to your clients, and what are your fresh ideas?
Good afternoon, Rima. I think we've seen a very good, strong comeback when it comes to the broader market, and some themes are playing out well. And particularly what we like at this point is some of the textile companies, be it Himmat Singha Seed or Vardhaman Textiles. We think that given the issues that are there, both China related and Bangladesh, some of our textile companies tend to benefit. And if you look at the export data, I think there is a significant improvement, in terms of export and of course the domestic market also is showing signs of recovery. So I think Himmat Singha, Vardhaman Textiles, these two names particularly we like at this point of time.
No Gokuldas there, Hemang? Hemang, hi, good afternoon. No Gokuldas there, or a view on Gokuldas?
I think Gokuldas also, is very well placed given their positioning on the export front and the overall capacity. But we think that the, pricing part, they are not that well, equipped. So we think that the companies which are far more integrated and have a slightly better pricing power, maybe something like a Welspun Living is something that, we could surely look at.
Hemang, Vedanta is up 6%, 501, 502. Nimesh was just telling us on D Street Chatter the fact that all eyes are on the demerger whenever that sort of comes through. The buzz seems to be there. Any thoughts here?
So 2 aspects, Prashant. One is, of course, the demerger is something that you would see very soon. But more importantly, over the weekend or maybe early next week, people are expecting a very strong stimulus, from China. And if you see some of the metal prices, there is a bit of strength and stability which is coming back. So I think both these aspects are playing a role when it comes to Vedanta. So I think there is some more steam left across the names, be it Vedanta, be it JSW Steel, even Tata Steel is showing a bit of a rebound. NMDC, which is more domestic oriented company. I think there is some more upside left for some of these names.
15% gain on Swiggy this week. It's 545. Did you anticipate this kind of a run-up post-listing? And what should one do? Is it too late to get onto Swiggy?
I don't think most people expected, Rima, but the fact is that platform as a theme is something that people have been liking. I think very few companies which are able to show 25-30% quarter-on-quarter growth when it comes to Q-commerce. So everybody wants to kind of participate there. Not too comfortable chasing this kind of stocks at these prices. But within the platform theme, we do like PB FinTech, because of the kind of regulatory issues that may be there for some of the existing players. I think PB FinTech is relatively better placed.
PB FinTech is, of course, doing very well from those 1,800 sort of lows when the news about them getting into hospitals, etc., came through. Now, of course, I mean, recently, 3 days back, they announced that they're setting up a company. The board has given the approval and they're going ahead. There's a sharp recovery which actually has materialized ever since. So it's been a good week there coming through as well. Hemang, again, I mean, not discussed very often, at least we don't, but Goldium International, I don't know if you have any thoughts here.
Not looked at that company, Prashant, but this lab-grown diamond, as we all know, is a very big disruptor in the market. And, like what we have, let's say, Trent, rolling out some of the low price products and meeting with a lot of success. So maybe some people are of the view that, this entire frenzy around this lab-grown diamond, Goldium, could be a beneficiary. But honestly, I have not looked at that company, so won't be able to comment over there.
On the downside, look at Niva Bupa. Niva Bupa had it looked like it was having a fantastic, actually will go home with 25% gains this week. But from the high yesterday, which was about 110, it's given up a decent bit. So ends at about 94 rupees or so. I think we've come to the end of the session today. Just about 60 seconds to go for close. So maybe just start wrapping up things here. Hemang, thank you for joining us now, but do stay on. We've got the 24,670 on the Nifty. The Nifty Bank will end about 0.25% lower. And I think, the high on the Nifty Bank, exactly the high of what we saw yesterday. But no complaints really, because the Nifty goes home this week with 2.5% gains. Bank Nifty with about 2.5-3%. Mid cap index about 4%, and the small cap index about 4.5%. So Friday to Friday, it's been another very good week. And, it also essentially, by the way, means that the small cap index this fortnight, over the last fortnight, has gone up 10%. The mid cap index has done some 7.5-8%, and about 4.5% for the Nifty and the Nifty Bank as well. The Nifty Bank, by the way, is almost exactly a little less than 1,000 points away, which is about 2% or so from its all-time high at about 54,440. Rima.
For the day, the metals and the auto stocks did well. So the Nifty Metal and Auto Index clocked in a gain of about 1%. For the entire week, PSU banks ruled 5% gain on the Nifty PSU Bank for the entire week. And IT, not on Friday, but earlier this week, the Nifty IT Index has clocked in close to about a 3.5% gain. All in all, the first week of December has started off with strength. We're going to wrap up on Closing Bell. Don't go anywhere. Editors Roundtable is up next.